All right, so one of the bigger risks with Amazon stock right now is the magnitude of its spending on artificial intelligence and the chance that all of that spending will be wasteful and that it won't bring back the return on investment that Amazon is expecting. And so that's one of the biggest risks right now that investors are concerned about with Amazon stock. So, given that risk, I wanted to dig deeper in this category, listen to more of what the company's management team said to justify this spending. And so we can learn more about why Amazon is spending so much in this category and learn more about the probabilities of success for Amazon to earn from this spending.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so just to recap what I've talked about in previous videos, and that is that Amazon's said that they spent $26 billion on capital expenditures in the most recent quarter, and that level of spending is likely to continue. And so they're going to spend over $105 billion roughly in capital expenditures in 2025, which would be about $35 billion more than they spent last year, which was already a big increase from the previous year. So these tens of billions of dollars are really adding up now for Amazon. And so the company's CEO, Andrew Jassy, which I will say has done an excellent job since replacing Jeff Bezos. Remember when Jeff Bezos announced that he was retiring or resigning from the CEO role? So many investors were concerned if the replacement, Andrew Jassy, would be up to the task. And I will say that so far, the CEO has done a great job in managing this business. And it hasn't been an easy transition, right? The new CEO had to go through the unprecedented circumstances of the pandemic, lockdowns, coming out of lockdowns, and now this transition to AI and the big investments required. And so far, I will say the CEO has done a great job. And now the CEO is saying that the vast majority of the CapEx is going to be on AI. So most of that $105 billion they're spending is going to be on AI. And the CEO is saying that, look, we won't do it unless we see significant signals of demand. Like the only reason we're spending this much money on AI is because we see all of this customer demand. And if we're not seeing that customer demand, then we won't do this spending. It's not like we're locked in to spend this amount of money. We can always adjust it if we see that demand for this service is not growing at the rate that we expect it will. When the AWS is expanding its CapEx, particularly in what we think is one of the once in a lifetime type of opportunities like AI, I think it's actually quite a good sign medium to long term for the AWS business. And if you've been watching my recent videos on Amazon and their spending, this is pretty much what I've been saying as well. And that is when a company like Amazon, who's got the reputation, has earned the reputation of being a smart allocator of capital, if they are spending $100 billion on something, I think it's a good sign for investors because they can say, man, they found this opportunity and they're investing in that opportunity because they think it's such a good opportunity, right? So you can agree that Amazon's management team, or you may or may not agree that Amazon's management team has done a good job running the company. And if you think the management team knows what they're doing and they're smart people that know how to run their business, and at the same time they're spending $100 billion on something, then as an investor of the company, what should that tell you? To me, what it tells me is they found this opportunity. They think it's such a great opportunity that they're boosting their investment in the category. And to me, it's a good sign because I know if I was doing this kind of spending, being a small business owner, if I'm doing this kind of spending in a certain category, it's only because I'm extremely confident that whatever it is I'm spending on is going to bring back a good return on that investment. I'm not just going to spend on something just because, right? There's a reason why I would spend it. And the reason I would spend it is because I'm expecting that big return on investment. And I think the company is expecting a big return on investment here for this category. So he goes on to say that the AI business is now a multi-billion-dollar annualized revenue run rate business, and it's growing triple-digit percentage year over year. Triple-digit percentage year over year. And it's already at multi-billion-dollar scale. These kinds of opportunities are rare for a business that's already achieved the scale in the billions to be growing by triple digits. That's almost unprecedented, right? And so you can understand why they're spending this money here. So it is true that we could be growing faster if it weren't for some constraints on capacity. So even though their AI business is growing by triple digits, the CEO is saying it could have grown even faster if we weren't limited on the capacity. So demand is actually higher than what our capacity is, and demand already grew by triple digits, right? And so and some of the constraints they're facing are chips from third-party partners. They don't highlight who the shortage is coming from in the chips, but I think we all know this is NVIDIA, because NVIDIA has highlighted that they're sold out of their products for several quarters looking ahead. So Amazon's saying, look, if we had more of these products, if we had more of these chips to build more of these data centers, we would have more capacity and our growth in revenue would be even faster than it already was. But it's not just chips, it's also power. There is some constraints for power where the world is still constrained from what they believe they could serve customers if they were unconstrained. And this is one of the categories I've talked about as well, in that some of these companies that are trying to build these data centers optimized for AI, they're not able to move as quickly because they are constrained with the power source to supply those data centers optimized for AI. These AI data centers consume a lot more power than the traditional data centers do. And so it's not as easy to retrieve that or secure that availability, especially as you're not the only one that's looking to build these data centers, right? This is one of the fastest areas for growth. And it's not just Amazon that's spending in this category. It's Microsoft, it's Alphabet, it's Meta Platforms, and they're all spending over $50 billion, right? The lowest one of the ones I mentioned was Meta at $65 billion. Alphabet's at $75 billion. Microsoft is at $80 billion annually. Amazon is at over $100 billion. So you're competing with all of these other buyers or people who are trying to, or businesses that are trying to secure this power. So I hope this elaborates on the justification of why Amazon in particular is spending in this category. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.